On average, Uganda loses 13.3 trillion shillings of potential income tax collections every year to companies that carry forward losses. Records indicate that in the last 5 years alone, 2014 to 2019, the amount of money reported and carried forward by companies had accumulated to 66.6 trillion shillings. For example, in 2019, just prior to the COVID-19 induced lockdowns, out of 44,734 companies that had filed income tax returns, 12,286 of them filed carried forward losses amounting to 14.9 trillion shillings. A critical look into the companies indicated that while companies increased from 24,949 in 2015 to 44,734 in 2019, so has the amount of losses carried forward from 12.1 trillion to 14.8 trillion shillings. It is these perpetual loss reports that are unsettling sections of the civil society organizations under the Tax Justice Alliance Uganda. According to the Tax Justice Alliance, the trends seem to point towards foul play stemming from the generous Section 38 of the 1997 Tax Act, which reads, subject to Section 75, where for any year of income, the total amount of income included in the gross income of a taxpayer is exceeded by the total amount of deductions allowed to the taxpayer, the amount of the excess in the Act referred to as an assessed loss shall be carried forward and allowed as a deduction in determining the taxpayer's chargeable income in the following year of income.
This is an investment incentive in that it gives taxpayers or investors to the opportunity to recover any losses that are incurred against their subsequent profits prior to being required to pay taxes on the profits. So you find that it will encourage investment, growth of investment in Uganda, and it also motivates, other investors to attract them to come and invest in Uganda.
As Tax Justice Alliance Uganda, we have noted that a number of multinational corporations are taking advantage of loopholes in tax laws to reduce their tax liabilities. Specifically in Uganda, Section 38 of the Income Tax Act, which allows companies to carry forward losses indefinitely, is one of such loopholes.
Since 2007, like-minded civil society organizations have fronted the idea of capping the number of years for taxation of companies that are in the habit of carrying forward losses, but Parliament is yet to be convinced.
We have proposed to government to have this law amended, but Parliament in its wisdom has thrown that provision out.
It's an internationally recognized practice. The only problem is that it's being abused, and that's what needs to be addressed.
If you consistently declare losses, but you are seen to be progressing, then your losses should be subjected to tax. But that is converting a loss to a revenue. Because how on earth do you justify a revenue on a loss, a tax on a loss?
Now, when you tax a loss, are you going to call it loss tax? This is called income tax. You tax what? Income. Then when you tax a loss, that will be a loss tax. So you must make a tax for income tax and make a law for loss tax, which is criminal in the whole world.
The government position is that the section was aimed at boosting investments and ensure that they do not die young. To this end, while working out the 1997 Income Tax Act, a special section was carefully crafted to ensure businesses continue to survive in the event that they make losses in their infancy. It is in this context that Section 38 in the Income Tax of 1997 was born, unnamed carry-forward losses.
At the time we made this law in 1997, we had very few investors coming here. We had issues, we had poor infrastructure, we didn't have reliable electricity, and the cost of electricity was high. They couldn't access capital at competitive rates. So When you combine all those, this was a sweetener to investors who are coming into this country, so that at least they know that whatever they have invested will be recovered.
As the Tax Justice Alliance, we think that there is a problem there that can be a loophole actually exploited by potential taxpayers. And we want that section to be amended.
In essence, according to this section, tax losses are determined by deducting allowable expenses for tax purposes from the gross income that has been derived by that company in a year of income.
Now, when you prepare those financials, there is what we call a profit or loss. We normally term that as accounting loss or profit, but for accounting. Then it is from that loss or profit that we make adjustments to arrive at either the chargeable income for tax or an assessed loss for tax. So it is possible for a company to be having an accounting profit and then report an assessed loss for tax because of the adjustments we make.
25 years down the road, many local and international companies have indeed flocked the economy, but to the dismay of government and civil society, the resultant income tax targets remain low. By allowing deductible expenses, many companies are much more eager to reinvest the profits and declare losses. This is why even well-to-do companies often report losses despite growing exponentially.
When you have a lot of generous deductions on plant and machinery, on your day-to-day expenditures which you use in the production of income, on interest and all this, you find that some companies may prefer that instead of paying tax to government, they would rather use that money they would have paid.
We believe that there needs to be a deliberate effort to close any loopholes in legislation or in the administration of the tax regime that provides any slight loophole that allows taxpayers or potential taxpayers to pay less or none of their fair share of taxes.
By interpretation, Section 38 shields and allows companies to declare losses as long as they can account for more expenses. The prerogative to declare losses or profits remains with companies. The civil society looks at this prerogative as a loophole that many would-be taxpayers perpetually exploit. This gap is largely blamed for the paltry 13% income tax ratio to GDP, a far less percentage from the target of 23%. While several sections of the Income Tax Act of 1997 have been amended, Section 38 has not, despite being porous in as far as leakage to potential taxes. There is a strong belief that companies use creative accounting to perpetually declare losses and pay little or no tax at all. The irony is that the fastest growing sectors tend to report most losses. In the last 5 years, information and communications posted the most losses of 14.7 trillions, followed by financial and insurance activities at 8.9 trillions, manufacturing at 8.4 trillions, and electricity, gas, steam, and air conditioning supply, among others. This implies that majority of factories, banks, insurance companies, telecoms, and electricity companies perpetually report losses, yet most of them have a streak of treating their executives to fat salaries and as well as dividends to their shareholders. The aspect of perpetual reporting of losses has seen many local and multinational companies come in the economy, do thriving businesses, report losses year in, year out before exiting the scene.
In addition to government providing the many incentives to corporations, we have taken note of the fact that corporations continue using methods and tactics to avoid paying their fair share of taxes. These methods include trade misinvoicing and transfer pricing. They also take advantage of the number of double taxation agreements we have signed with other countries.
Multinational companies have dedicated teams of tax experts on how they can inflate figures, on how they can make everything a cost to the company.
The tax experts acknowledge that this action in itself was and remains well-intentioned and recommend its protection from abuse. Their voices are equally supported by private sector. The business community blames instances of tax avoidance on overtaxation the business community finds itself laden with.
Uganda's tax rates are high. If you look at our VAT rates, if you look at our corporate tax rate, it's high. So we've always made the proposal that if you want to expand the tax base, lower the tax rate so that people don't have incentives to evade tax. Over people to come into the formal sector but come up with creative ways of evading paying tax.
The civil society insists that much as investments are welcome and key in providing other forms of taxes and employment, there is need for fairness.
We have engaged government, we have engaged Ministry of Finance, we have engaged Parliament to have this section reviewed, and we'll continue engaging government.
If the government is serious about broadening the tax base and increasing the tax to GDP ratio, this is an area that needs to be looked at. And so we are appealing to government, and we are especially appealing to Parliament to ensure that they are able to take up this proposal as a progressive proposal that will close a loophole that can be used by potential taxpayers to avoid paying taxes and deny this country of the revenue that it needs to deliver quality public services.
We wouldn't want businesses to be paying tax on their capital. We want to collect on the profit. So we need to put into consideration the time frame within which any investment would recover the initial capital and start making profits. So beyond that, we wouldn't be expecting any company to be in a loss. So we can put a cap on the number of years, but basing on the time frame within which any business would recoup its initial expenditure.
Ways in which companies perpetually report and carry forward losses. Double accounting. A. Inflated allowable expenses to URA. B. Actual accounts to the business owner/directors.
If you are saying a company can declare a loss and you cannot verify and reverse it, what if that same company now declares a less turnover? And you are saying maybe tax on turnover is going to be 0.5%. But is the turnover correct? So either way, we are not actually closing the loophole.
When I'm doing business with you, I have to set sure documentations, especially for handling business transactions. Those ones which I disclose to URA and those I don't disclose them to URA, and those are the ones which I use for making profits. But these ones which I disclose to URA, as I didn't do any business, the whole of this money, nil, revenue nil. And these bank statements that I use with these clients, I don't disclose them. But for these ones, I say I didn't make a business, and I'm paying rent or I'm paying interest. And interest contributes to losses.
The question of allowable deductions work in favor of creative accountants to reflect losses. In light of the above discourse, and the fact that Uganda continues to grapple with the challenge of low tax base, civil society strongly believes that reviewing Section 38 is imperative if it has to be shielded from abuse.
We are calling upon government to review Section 38 of the Income Tax Act to ensure that carrying forward losses is capped at 5 years. And thereafter, all those companies which are carrying forward losses pay 0.5% of their gross income as tax. We are also calling upon URA to vigorously audit and monitor all those companies which are carrying forward losses. And we are requesting government to strengthen the capacity of URA to effectively do that work.
There was concern that at the moment there is no time framework within which somebody can stop hiding behind that not to pay tax. And we've agreed that this time round we'll be putting a definite period of time within which you can no longer continue claiming that you're making losses and therefore you cannot pay tax. So I think that is going to be collected in these tax amendments that we are working on.
From where we stand as the Tax Justice Alliance, we're not in for prohibitive taxation, but our stand is actually tax justice. We're saying every taxpayer needs to pay their fair share of taxes to the coffers of government.
Until that happens, other remedial measures to stem perennial reporting of losses are also being fronted.
We are trying to investigate and interrogate the deductions also and see whether we can reduce them, and in that way we'll have at least less carry forward of losses.
My advice would be to cap for the policymakers, to cap the number of years within which a company can carry forward the losses, but that, as I stated, should factor in the period, the time frame within which any given company, all companies in a sector, are expected to recoup their initial outlay.